All right, welcome everybody. Thank you for joining me today, Wednesday, and if I'm not mistaken, it's been October 23rd all day. So it's been an interesting time in the market, I believe. A lot of you folks are in our live trading room, and I know Jude, not Judd, Jude had made a comment and sent in an email. Actually, today, you're the last one that sent an email. Got a bunch of good questions, and I think we'll sum it up, and I will give a due. Well, I don't like to knock on wood. Brag, that is, but I'm reading at the same time. He's portfolios in the green and must complement most of the trading. Most, not everyone. That's right. Equity analysis and calls are spot on. We have just a good series in regards to that question. What you see in front of you looks like a bunch of numbers, a lot of columns, and all of it is related to John Person methodology and a couple of the trading tools that we've put together, namely PMC, the relative strength indicator, and again, Person's pivots, the PPS indicator, and looking at our volume tool, which is available through VIP clients. Now, the purpose of the PUG meeting, and it stands for Person's User Group. And the Person's User Group is to cover everything about John Person's indicators and what we're doing here at Person's Planet as far as our advisory service and research firm and the products that we put out. The product and the topic today is to cover your questions that we invite people to send in, and we cover those topics. If there's nothing to talk about, then I'll raise some issues myself. We do have several emails to go through and a lot of different topics. We have a couple questions on the radar screen, and we're going to cover that first. That's why it's here. Next, we are going to be discussing the Algo new version 18 and their changes. And when, again, I get this question a lot, so I think it's important to go over. When is it time to revisit and update trading strategies? And that's a very interesting question, because one of the things that we do in the live trading room, as we created, if I may be so bold, double check, I need this to go on here, so 1 second. So one of the things as we get together with our PUG meetings is to go over our products and answer questions that everyone has sent in, and go over from what Person's User Group PUG is in regards to both either the John Person products, the indicators that we've created, the VIP products, and we have a few questions on the Algo, the new latest update on the Algo 17 V18. V18, we called it now Algo 17 Extreme V18, only because we didn't want to call it Algo 18. And it probably with the updates should be called version, I don't know, 59, I guess. We've keep coming up with, I think, not just better ways of analyzing and optimizing and putting strategies together, but more logical interactions of these formats, and to be able to optimize. And so the questions that we have today that I want to go through is, we had a couple questions on what PMC, how do you get it? Why is the volume indicator better? I keep telling people in the live trading room that Ed, not Ed L, but Ed P, and who said, why do I keep saying I believe the volume indicator is worth its weight in gold? Because it is. It's the volume indicator that we created is a momentum indicator of volume, not price. And number two, it relates to measuring the percent change of the volume. So it filters out volume a lot better. It gives us a stronger indication of when momentum of volume is dissipating. So on strong rallies in price, if there's no momentum behind volume, it generally is a warning sign that the bullish momentum is subsiding. And so with that stated, it also inversely works that when we see a return to strong momentum. And so when I look at a buy signal in a stock, I'm looking for a couple things. And so again, this will cover what my criteria of stock picking are. So first question is, what are my criteria of stock picking, and how do I use the radar screen more efficiently? And on the radar screen, what you see happening here is the symbol for a stock. The daily is the interval. This is on a daily basis. I've got the last price, my net change, and then the net change percentage wise. So it's interesting that we had Chipotle Mexican Grill. Let's just put up earnings, CMG, Chipotle Mexican Grill, CMG. You know, it down $42. So people would say, oh my God, it's a huge move. $42 is a big move, no doubt about it. But the price and the expense of making that $42 is a different story. The percent change is down 5%. Now, we've had other positions without playing in, for example, an earnings play, like a Ralph Lauren, where we've seen the market move up 8%, or Under Armour, which we just got out yesterday. Under Armour, we were in it from a week ago in our advisory service. And as you can see, we got out pretty decently. We were in around 1788. We got out yesterday at around 1921. Now, that was in a short period of time, that was a big move. How much of a move? About 8%. So it's kind of funny that we, just to prove a point, we don't need to play earnings all the time to make money in this environment and in this market. What I do is I look for markets that are generating, and I like to see relative strength appreciation via the PMC indicator. So let's just take a look at this one little trade here and see what I'm referencing. When I'm looking at a volume, and this is our volume tool right here, and this is the volume indicator, and this is just to compare an apple to an apple. This is the on-balance volume, which I would say I still use, but I don't rely on it to make my trade decisions. And while it is still a useful tool, it is not one that I like to say it's the best of the best. It really isn't. And so when I look at the difference between my volume indicator and when I'm looking for, like, for example, that high close doji, when you take a look at when we get a buy signal, the momentum of the market, while it's red bars, which is this is the PMC. This relates to the price of the stock percent change relative to the S&P 500, and it shows S&P 500 right here on your screen, right? But when I have a market that is actually near an old low, for example, this is one low and this is now the new low, right? So if the market goes down, but if I brought this back into focus for us, or I'm going to try to, which, by the way, we have our annual seminar next week down here in Palm Beach County, which I'm excited about, because we're doing something special for a lot of folks. And let me get where the heck is it? There it is. Get this drawing tool back over here. Click on that, and here we go. All right, you can clearly see that the current low on that buy signal on the relative strength was, even though the market was weak and it fell off the highs, the relative strength was nowhere near the old lows. So that's a sort of a convergence pattern. It says that the sell-off wasn't that strong. And so I'm looking at this as saying, hey, that's a nice PPS buy signal. And when I look at the volume indicator, it too is not making significant lows. In fact, we had a positive histogram reading. Now, comparing an apple to an apple, you look at on-balance volume. Note where on-balance volume made a consecutive series of lows and then made new lower lows. I think a lot of people would be taking a look at on-balance volume saying, I'm not buying because there was strong negative momentum of volume. Now, that is misleading, and that's why I say my volume indicator, it's worth its weight in gold, because it actually gives you a different tell of convergence patterns combined. If you're trading a stock, so again, the question du jour, or one of the top questions that we had to answer today, is what are my choice selection of indicators that I use in the person's package to make my stock selections? I'm looking for weekly, monthly trends. I'm looking for daily buy signals, and I want to look at the condition of the stock relative to the S&P 500. So I'm looking at the relative strength PMC indicator, and then I'm looking at the volume pattern. So that's my sequence of orders. I would say my scanners help me to determine whether it's a weekly high close doji, a weekly PPS. Then I like to look at the condition of that buy signal. Is it with improved relative strength versus the market? Is it with improved volume? And that is part of my stock selection. And those can be found as I go through my shopping list with you. Those can be found right here. So on my radar screen, look, we have our weekly signals, whether it's a high closed doji, low closed doji, or a PPS. We have our PPS indicator, which is right here. And we have the moving average component of the PPS indicator. That is, and then while the volume indicator isn't there, I do have a 10-period moving average, a 10-day average of volume, I might add, versus current volume. But when I look at whether or not I start with running scans to say what stocks are getting bought, A. B, I also put out every month or every week, we have a weekly newsletter, and every month I update what the sector seasonalities are. So I definitely like to look for stocks that are generating buy signals that are in sectors that are seasonally strong. That's my shopping list. That's how we created the radar screen to help us. And then again, this is the normal package that everyone gets by default. You have a 5-minute, a 15, a 60, but that should be 60. I obviously was goofing with it and made it a daily. So let me change it back to 60. There we go. Daily, weekly, monthly. So that's how we look at and get into things. We picked up a stock here the other day, a little company called Ralph Lauren, Ralphie Boy. If you'll note, it had a nice weekly buy signal that's populating. We have a daily buy signal, and retail is starting to populate into a buy. Now, we're in this at lower levels. Today was down just a tad, but we're still positive on this trade, and we've raised the stop. Yesterday, we started to note that our sector started to really pop in energy, transportation, and so we started to rotate ourselves lightly into some energy stocks, namely Occidental and Holly Frontier. So if we may, I'll take a minute and go through that, and you'll see one of the things that I look for, if I'm going to be a buyer, I want to go with stocks that are, again, the PMC indicator. The PMC indicator, and let's go with, let's see if it's in here. I just have to double click here on the symbol, and it'll collate to alphabetic. So you'll notice I don't have Holly Frontier, so let's get rid of Anadarko because they were bought out by Occidental. So let's put in HFC, Holly Frontier. All right, now I'm going to double click, and everything should be double click, I said, and double click one more time. And there it is. Now everything is back to alphabetical. Holly Frontier, HFC. You'll notice, well, you can't now, but it's dark blue. I'm looking to buy stocks that are generating weekly buy signals or are in a weekly buy, which Holly Frontier is. It was both in a weekly buy signal. Okay, so it's been in a monthly buy, it's in a weekly buy, it had a couple-day pullback, and it's been in a daily buy, and then yesterday we kind of broke out. So instead of buying the high of a breakout all in, what we do is I traditionally like to scale in, knowing that maybe because there was an acceleration to the upside in the price of the stock, and I'm coming to the party late, instead of being all in, I tend to scale in and then hope for a little pullback. So I look to cost average myself in. What were the dynamics of this market? Well, first and foremost, if you take a look at what I've just stated, I like to see stocks that have improved volume. So question, what does the volume trend look like in this pattern with our indicator? And again, these are a lot of the topics that we will cover in this. If I can get back over here, where is my drawing tool? There it is. And now we can go back over here. And you can clearly see we have every time, this was a very strong convergence pattern, new lows, the number 2 point took out the number 1 point, and corresponding indicator, you'll notice that we have a higher. That is a very strong bullish convergence pattern. So, all right, we got a little rip, and then we got a pullback, and now we got another buy signal, and look at that next volume trend. We have an upside volume trend, but what makes this really special is that we now have a multiple week outperformance in terms of relative strength versus the overall market. And to me, this is a very strong, longer term pattern. So if I'm a stock trader, if I'm a day trader, that's a different story. But if I'm a swing to a longer term stock trader, this to me has a very promising trend in the marketplace. It has closed greater than past or prior swing highs. It's maintained closes greater than that old high. So for practical purposes, if it pulls back slightly, I hope it does. So I'll buy some 50% at the daily breakout, and I'll hope to see a pullback in the next week or so, because after all, even in the most best bullish market conditions that you see, markets do tend to kind of pull back just a tad off their highs, right? You get just a tad of a pullback, just a tad of a pullback. So instead of buying everything all at once, be patient and look for maybe a potential pullback in the market. So in markets that are in beginning phase breakout, they kind of move up, and then they have this like bake and shake where they kind of do the old dump before the pump, right? So when markets are in final stages of bull markets or final stages of breakouts, they tend to have less pullbacks. Right now, I think this is in just the beginning phase of a potential breakout that could lead us back up into like maybe the 70 level. Anyway, too many drawings. My bad on that. What indicators tell me is just what they're called, an indicator. And the indicators that I have are woven together to help me make sense of the price action. Now, we could have a very light volume rally, and that doesn't mean anything. The market have a minor rally and not outperform relative to the S&P 500. Fund managers are looking for the best stocks in the group and the ones that are outperforming, and that's where you migrate towards. And so with that said, a stock that has relative strength outperformance with stronger volume tends to be the leader. And so in this group, I wanted to go with the leader, and that's why we went with Holly Frontier. What about OXY, Occidental Petroleum? And that was another one we went to. Why? Well, very similar with one exception. And the similarity that I will share with you is the relative strength is moving up and the price is going down. That's a bullish convergence. As the price is going down, what is the momentum of my volume indicator doing? It's showing that nobody wants to really sell down here at this low. So again, same story. Buy some and look for a small pullback, because quite frankly, we are still in a downtrend, except for this downtrend is starting to form a very suspicious pattern called a declining wedge. A declining wedge typically happens at the end of trends. And then when you get a market like after major rallies, Elliott wave theorists, they find that when you're in the end of wave 5, you get rising wedges, and in the end of wave 5 in bottoms, you get declining wedges. Either way, Elliott wave works when it works, and I've studied every form of technical analysis under the sun. I do not find Elliott wave to be an efficient tool for me that I can make a living at every single day, day in and day out, but I do know chart patterns, and to me, this has a very formidable chart pattern in the shape of a declining wedge. But one of the things that I find more valuable to me is that as it's declining, it's not weakening, its relative strength is actually improving, and the sell-off and the lows that we keep getting, price lows, it doesn't stay down very long, and there's no selling pressure because we have a rise in volume. And so therefore, I'm looking, when I make stock selections in the marketplace, I am looking for those anomalies. Yesterday, why did I jump in on Oxy yesterday and send an email to everyone? The day hadn't closed. It was still early, but I was looking at this from a shorter term perspective and using 60-minute and also daily, which we told everyone in the live trading room. This is going to have what we call a last conditional change as well as a high close doji breakout. And what is the last conditional change? This fuchsia dot, it's hard to see. I'll zoom it up for you, but that single candle, the high of that candle acted as resistance. We were closing greater than that line in the sand, greater than the pivot, which is the blue line. We were going to form a high close doji, and on top of it, I had an extremely strong double bottom convergence pattern, not just in the relative strength, and you can see that right here. So there's the number 1 low, and that's the number 2 low. And you can see our indicator. This has a higher low, and on balance volume does not. So once again, this does not really do much for me relative to this relative strength. And then now, and more importantly, look at our volume indicator. Clearly shows a stronger volume accumulation pattern. The momentum started to turn positive right in here at the lows. So to me, this was a very positive performance in the market. Okay, so that to me was saying it is time to get in on that trade. So that's how I pretty much utilize the indicators. What are they? Did I invent relative strength? No. Person's market catcher is just that, a relative strength. But what I did was I put it in the form of a momentum histogram, number 1. Number 2, we color coded it so that you could see a market in 4 distinct stages: outperform, strengthening, lagging, and improving. Bright blue or aqua blue is outperforming. Dark blue means it's performing, but it's starting to weaken. Red means it's underperforming, el no goodo if bullish. Red bad if long. If long and red, not good. But if looking to buy and the market's starting to base out, fuchsia is a color that says it is starting to improve relative to the overall market. So when it comes to stocks, we have unique tools, relative strength to the S&P 500. When it comes to stocks, we have a volume indicator relative to its peer group. We could take a look at that relative to its own volume trends. I believe that volume has been masked, and that's why even on balance volume, while it's still okay to use, it's not as efficient as it was 5, 6, 8 years ago, or 2 decades ago, since I started using it back in the late 80s even. So the moral of the story is, I think what we need to do, and all I have done, is help to modernize indicators and modernize them so that I still believe volume is the lifeblood of the market. After all, people are looking at unusual volume activity in options, right? People are looking at volume in different forms. I just looked at volume instead of saying, let's look at absolute volume. Let's look at volume in terms of percent change and look at it as a momentum study. And that's where the volume tool was created. It is not a publicly widely dispersed indicator. It is closely held. It will never, I don't ever believe I will launch it as a free indicator. It works too well. I don't want it out to the general public. After all, I don't want to be selfish, but just think of this. For every winner, there is a loser, and we need to have a better edge in the market. So I keep this fairly close. It is something that is available exclusively through only TradeStation and my TradeStation lifetime VIP package clients. So there is the explanation of that particular tool. And I hope I answered your entire question on, excuse me, how I stock pick and how I utilize the radar screen and my own personal indicators. All right, now, are there any question there? By the way, live in front of us, not in Memorex, but live, TSLA had a bit of an earnings positive movement. It's up about $30. Some of you, how many do you guys remember that our indicators were bullish on Tesla, and yet in the live trading room, while we are out of that option trade, we were bullish when the world was bearish on Tesla? I'm sure a lot of you guys would know that, right? Raise your hand if you have been in the live trading room and know that we were promoting alongside Tesla and had clients make money and made money in Tesla long positions. While we didn't make a specific earnings play, let me just explain to you. While it's in a weekly buy and we were calling for the market to move up, by the way, look at the relative strength. Someone came out, by the way, and I think it was 3 weeks ago on that low right here, and downgraded Tesla. Now, I don't know about you, but I don't want to make fun of others, but it's either stupidity or criminal. Why criminal? Because if a market goes down and you put out a downgrade and you do it on the low, they never come out and make downgrades on the high. It was the low. They came out and made a downgrade there. And I think we were long against this weekly buy signal. The momentum was positive. The volume was positive. And note what was going on here. The relative strength was positive. Once again, we had the right strategy on because we survived a stupid downtick, a dump before the pump. And now you're going to find Tesla's at around 280 and change right now. It's up probably right about there. Anyway, the trend is up. And just to give you an example, how does our indicators help to navigate these markets, which are very treacherous, very tricky? And I think that by looking and searching and using confirmation tools, if you're so bearish, then why isn't the market closing closer to its lows? And what idiot downgrades a stock at the low at 220 without coming back saying, oops, I was wrong, and keeps his job? I mean, weathermen get to keep their job when they, oops, we missed that one, sorry. Did we say it was going to rain? We were wrong. Did we say it was going to be a small category 1 hurricane? So it took out the whole Bahamas and turned into a Cat 5. Sorry. Anyway, enough conjecture. I thank you for your question. I think it was it was a good question and a great review. All right. Let's see. We have more questions on Algo version 18. So if my daily trading, I trade only Monday through Friday in Singapore. So sleeping time, if I would piggyback Algo. All right. In the live trading room, gang, may I make mention in the live trading room, I created strategies in the live trading room that only activate when you're in the live trading room. Now, if you're trading 24 hours or you live in Singapore, for example, you can develop your own program. You do not need to copy my settings. My settings are only for the live trading room, which we're asking a market to give us trades only for this amount of time. That's like taking a square peg and jamming it into a round hole. We need to account for futures markets that move 24 hours. What if we had a market that had a dynamic move overnight and we walk in during the US Open outcry and now we're in a choppy, narrow trading range? Market went from strong trend overnight when we were asleep to more than likely is going to consolidate in the US Open outcry session, or at least maybe for a few hours in the morning. And therefore, you may get chopped around. So you can develop your own strategies. Maybe you don't like being in a 5-minute system. Maybe you want to be in a 60-minute system, and that's fine. We put up the programs in our live trading room based on the time frame that we have to trade together and stringent qualifications of risk factors. So you may have a less pronounced risk amount that you want to take per trade, or you may have more risk that you want to take. We only take 2 lots on our trading models, and you may want to trade 8 lots. So it all has a different risk mechanism, but you have the ability to create your own system. And again, with end of day or intraday, and what we utilize this is to say, hey gang, when we get in most of every single one of my trades, all have, or at least our charts, all include our volume indicators, so that traders could say, hey, do I really want to go short or long the market when the volume looks bad? Do I want to go long when the volume is improving? Maybe you want to piggyback that trade by utilizing the volume analysis, right? And so that's kind of one of the things that we utilize. And we do that with the Spider, the leveraged ETF daily on SPXL, the VIX 120, and the VXX 60-minute E-mini S&Ps. And then we take it a step further, because I also want to see what the condition of the market is. If I get a sell signal and I have the advanced decline at like 400 advancers versus 92 decliners, and I got a sell signal and the volume showing upside, I probably don't want to take that sell signal. I'd probably want to look for confirmation. So anyway, we have had a dynamic run in the market on crude oil, a dynamic run this year. And part of what we were going to do today was to go work through, as you can see, Algo 17 Extreme, V2, 18. So we're using the right one. And again, a couple of the questions were, let's see, leave the Algo 18 to take over and monitor my outstanding trades, stop in, take profits, I'll trail the other from 12 to 1800. Can you do that? Well, you can. Just make sure, if you wanted to monitor those trades, it's not that you monitor the trades, just maybe to make sure. And I think that to take every single trade, sometimes, we talk about this in the live trading room. When a trading system goes parabolic, straight up in performance, you're probably going to have a drawdown, just like the market. It goes straight up and then it may consolidate. And in that consolidation, you may get chopped up. So a couple things that could keep us out of a good trade on an algo. The risk is too great, number one. Number two, the signal came before we were trading, like maybe 6 in the morning or 7 in the morning, and it's in an active signal already. Number three is maybe the signal comes after our time to trade in the market. So that might be the difference of what's in the live trading room and what you can create yourself. This is an unbelievable program that puts you in complete driver's side. I mean, you're in the driver's, not just the seat, but on the driver's side. And that is the most important element about the algo program to begin with, right? So when would you not optimize, but maintain your system? Do you need to do it on it says for point one, do I need to optimize Algo 18 more often, like on a weekly basis? You need to optimize your program. If you think about this, and that's one of the things I wanted to teach and go over one more time quickly, and then I'll come back to this page. And it has to do with our radar screen. So we're trading crude oil, and everyone can see we have our energies here. And so if we take a look at Novi crude, or it is now October, we're in December, and you could see right here in the open interest in the daily volume, one of the things that's very important is this number right there, average true range. Average true range. Friends, if you have, and we've gone in an average true range. So let's go over to December crude oil here. And let's put up a chart here. And let me go into one last little look-see here. Format analysis technique. This is remove this because that was a different class we were giving. Average true range. Let's turn it back on and hit close. All right. When do you think you need, and think logically, why would you change settings, and what settings would you change? If you have a risk reward ratio of 1 to 3, and now I want you to think about this for a second. If you have an ATR of $2.50 on a 10-day ATR of $2.20, let's say, okay? So this is a 20-day ATR. So let's change this to what I use, format average true range, and go over to general, or inputs, excuse me, and change this to 10. And I think they do this on TradeStation by default. I don't know. I don't use 10 or 20, excuse me. I like 10. So here we have an ATR, a 10-day ATR that was around almost $3. Now, way back in March, in February, I mean, the extreme low on a 10-day average true range, which means average the range over 10 days was less than $1.76. Now, if you're trying to make $700 a contract in a $76 range or 76-cent range, that's damn near impossible, right? If you're only risking $200 per contract, that might be fine in a dollar ATR, but you can't risk just 20 cents in a $3 ATR. That's ludicrous. You're going to get stopped out. So when do you need to adjust your strategies? The logic is the interaction between how the market's trading in its ATR structure, and then when it has a decline in its ATR, you're going to have to maybe maintain and change or alter some of the settings. So the other day in the live trading room, I announced that. I said, guys, this thing is starting to see, we're back down to, what did I tell you? We were at $1.55 ATR. If you're near $3 and you go to $1.50, you've lost 50% of your daily trading range value, correct? I mean, you've lost 50%. So if you're looking for a big move, or your trailing stop doesn't take over enough, or you have a stronger or higher risk reward ratio, or you have a higher profit target, that might be good in a higher, wider average true range. But when the average true range contracts, you have to reduce your what? Profitability. You have to reduce your risk reward ratio. And that, my friends, is the secret as to when do you change and maintain a strategy. So high ATRs, you're bound to want to trade a trailing method. A tighter daily range, you want to probably get in and out of the market. And so without any type of trend. Now, the question is, when do we see the average true range change? That I wish I could predict. That we haven't done. We haven't been able to predict when ATR is going to go from $1.60 back to 70 cents. I don't know. But I do know this, that through history, the average true range, if you look at this, we do not stay at extremely high ATRs more times than not. We are at lower ATRs, or about $1, I don't know what you want to call it, about $1.50 to $1.20. So we go south of that $1.50, we go north of that $1.50, but your average true range, your in crude oil, is around $1.50 historically in recent years. Okay, and you can go back and back test this visually, and you can go look at what is your average true range, and let's go back through time. I mean, I don't know where we're at. I just moved the dial back. Let's see. View data window. Okay, I probably didn't go back long enough to satisfy us, but I went to June of 2017, so over 2 years ago. What was the average true range? You could see that down in this period, we were just about around $1, right? So if we go back even more than that, I mean, that's pretty wild considering the market is, way back when in November of 2016. So that's 3 years ago. The ATR was $1.06. Where was the price structure of crude oil? 53.60. Holy shnikes. Crude oil is the same price, but volatility is higher. Crude oil is the same price, but activity trading crude oil is higher. So again, does it have anything to do with where prices are? So some people say, oh, if price goes to $100 a barrel, ATR is probably $5, maybe. If crude oil goes back to $20 a barrel, ATR is probably 40 cents. And that's not necessarily true. In case in point is the activity on the amount of traders and attention towards crude oil. We are seeing a lot of activity in crude oil, because and that's why you could clearly see we go back 3 years, same price structure, 53 area as we are today, if I'm right? 50 price is 53, 55, and where's the ATR? What a coincidence, the ATR. So you're going to have to maintain and not really look at your the algo optimization. You're going to have to maintain your eyes and watch your average true range function more so. And that's where, if you have a very tight range, $1 range, you could probably capture less than half of the daily range in profits. What is that? 50 cents. Less than half of that. So if you have $1 range, probably less than that, because you're going to need the market time to get the signal to get long, the signal to get out. So I would imagine you could probably take a third to half of a $50 range. So that's 30 cents, right? And that's the logic behind what you would be looking for. So again, it's the nature of the market, and your strategy has to do with the condition of how the market trades. This is some pretty wild stuff for a market that's gone nowhere fast. This is just extreme volatility of a market that is going really nowhere fast. It's the same price as it was 3 years ago, isn't that? I mean, okay, give or take, it's at 55.88 today. 53, 55, semantics. It's about the same, one and the same. So I hope that answered your question of when would you want to run maintenance on your algo program. And it would have to deal with, once again, the change of guard on the ATR. Now let's take a look at ES real quick, because this is pretty crazy as well. So wait for the little circle to stop circling, and there we go. So we want to format the chart, excuse me. Let's go. We got 10. That's good. Let's go to scale. We'll auto scale it. Hit OK. We want to put in, do I want on balance volume? Sure, why not? Go to format and auto scale it. Sure, what the heck. Do I want volume on interest? No. Volume indicator persons. It is on, so let's maybe format it to auto scale. Sure. Do we need PMC? No, because we're not taking a relative strength. But my histogram I'll take a look at, and we'll go to format and just put it back so it's nice and pretty for us and organized. I like organization. It's very important. And then I know what indicators are out there. I'm going to leave PMC kind of in a flatline mode, because it can't compare ES to ES to Spider. I mean, we're comparing the relative strength of the same product, right? All right. So what do you see here? Spikes in volatility, right? So a very short-term spike in volatility. So we go through periods of excessive volatility. Remember, this was, you know where that was last year. I mean, we were like on a 10-day basis, 96 handles. Listen, the question begs, and the question on the table is, how will I know when ATRs change? Well, one technique that I teach in our seminars, okay? One technique. Oh, I hit the wrong button. This may not be good for us, folks. I apologize. I hit a backup scan. Yow. I didn't mean to do it. I meant to hit cancel. And yes. Person, dummy. Just to let you know, sometimes I don't do the smartest thing in the world during live presentations. All right. Okay. All, please come back alive. Give us a second here. Perfect. All right. Not bad, right? All right. That was a user error. That was all on me. My bad. Okay. So when do we know when to change? One of the techniques that if we are in ATR could be used, and you can kind of look at ATR as kind of like a trend, just like on balance volume. When we start to break out of a trend, we know that the ATRs could expand over time. If we break out a trend, we could see that ATRs could expand over time. If we start to break out of trend, we know that ATRs can contract. And so we want to look for and watch for these periods where you get inactivity or decreased periods of ATR. And the other day in the live trading room, was it yesterday, I think, or 2 days ago? It was Monday. I said, hey, gang, kind of weird. Gold, crude oil, E-mini S&Ps, all of these markets, the average true range, the volatility, were all contracting at the same time. And that was interesting to me, mainly because we've had a heightened period, an extreme period through August and September of heightened periods, and there it is, a heightened period of volatility or intraday volatility. And I mean, there it is, right? Now, one other thing that I will note that, and I wouldn't say this as a general rule of thumb, but markets go up a lot different than markets go down. Watch this. As markets go down, ATRs go up in the stock market because you get wider ranges and there's more liquidation. In bull markets, you get these narrow kind of ranges. They're really kind of a pain in the ass because people are scared and they don't want to get long, and I don't know, and it just all of a sudden you get contraction. So typically you could observe, and that's why we call our advisory service thoughts and observations. In the equity market, at least with S&Ps or the stock market, they go up a lot slower than they go down. Or when the market is in an uptrend or bullish bias mode, we generally tend to see ATRs contract. And that's my observation. And equities, back test me on that. Go back and visualize that. Make note, you may have already known that. I may have already addressed that. So just like a trend, if you break trend, you can anticipate the trend being the trend of the average true range. Break the trend and you have an expansion period of ATRs. Break the trend, you have a contraction of ATR. I mean, that's just a rule of thumb. It's not 100%. I can't tell you, is there a predictive power that says next week at 2 o'clock in the afternoon, volatility is going to expand again? There doesn't exist. We can guess and say, well, there's a Fed meeting next week, or there's an event next week, or there's more earnings next week. We can guess and say there are events that could cause markets to move. Now, during the summer, I looked almost like a buffoon because I kept telling everyone in the month of August, volume levels were like literally non-existent. And light volume environments can do one of two things. Nobody's trading, so you don't get markets move. Only a few people are moving the market, and they can have exaggerated moves. So light volume environments, we could get a couple things. Summertime markets don't move, or summertime markets could give us unbelievable price action. And we had the latter, unbelievable price action, and it was almost like ridiculous. Every day we woke up, the S&Ps were up 1%. The advancers were 400, the decliners were 100. The next day we wake up, the market's down 1%. The decliners are 400. The advancers were 100. So in August, that was this period in here where we had an excessive period of expansion in ATR, and the market did nothing but go sideways. So I can't predict when do we get expressive periods of heightened volatility. An algo system does a couple things for us. It executes trades. It gives you the opportunity to have them enter for you so you don't hesitate. If you've done your homework, in fact, you can optimize the system to saying what is the best performance in this type of environment that we're in. Optimize the best performance, meaning profitability. Or you can actually say, hey, I want to only take longs in this market. I don't want to take shorts. Or I want to take longs if the market breaks out of moving averages. And so that gets us to my last question, the last change. And double check here, make sure I get that question in. Regarding CL, at what ATR is ideal for trading 1, 2, and 5 and 15-minute time frames? That's a kind of a good question. Regarding CL, at what ATR is ideal? The higher the ATR, my guess is the higher you want you probably a 5-minute basis on a higher ATR. A lower ATR, maybe 1 minute. It's kind of like a double-edged sword. If you have a really wild range, $3, $4 move in ATRs, you can go with 1 minute for quick scalping. But because a 15-minute is too much time, and in a higher ATR, the higher the time frame in a higher ATR environment, let me repeat this, the higher the time frame in a higher average true range environment, the bigger your risk. So ideal for trading depends on your risk. So we all go back to risk. Everyone talks about how easy trading is. Everyone talks about how much money they can make trading, but they don't talk about the cost of doing business and what is the risk to make that money. That's what I try to teach you. What is the risk in that trade? Okay, and that we can control. So let's get into again. The videos are in the process of getting finished and posted for many of you who are interested in finding out what the new and latest and greatest changes and what made this the latest and greatest change in the market. You know, a few things changed since the original algo, and that's a joke. A lot changed. And yes, we needed to increase and at least revitalize those videos, and that we're in that process. Unfortunately, we keep coming up with servicing our clients first and foremost is servicing our clients. And then second off, again, the most important element is that we make sure if there is a bug, we fix it. And if it's a TradeStation error issue, we still have to fix it, even though it's not our error. So we are working together in getting this market done. And here are those market instructional videos done. All right. So what was the major changes that we had in the market? Well, dynamic last conditional change, dynamic exit stops, compression stops. We created 3 different stops. A last conditional change, which is, again, for example, a bar that closes greater than a high, the last conditional change is that fuchsia bar. So would you want your stop underneath that fuchsia bar? I don't know. What is a dynamic exit? A dynamic exit is the greater of the two of an ATR, average true range of a bar, versus the last conditional change. So it's a combination within that one tool, dynamic exit. Now, compression exit, that is an entirely different animal. And that is something that is expressly dynamic. How is it dynamic? Well, first and foremost, the compression exit tightens the stops over time. And that is a dynamic function that first and foremost, you can turn it on and you can optimize it. And it says here, ATRs to start. The compression exit will override dynamic. If you had this on, then you can turn it on. In fact, let's just do that and hit OK. In fact, let me go back and go to format, just to let you know. When you optimize any program, it's optimizing through TradeStation the best profitability. We're going to put compression exit to start at 2 average true range. I'm just going to override and just put an input in a function. And let's hit close and let's examine it. All right. All right. And let's expand on it. Now, I'm not really building a strategy with you. I'm just showing you what is going on with all these lines. All right. So first and foremost, that's what the algo optimizer also does. It shows lines. So first and foremost, if you're building a program, I don't care if this is a 60-minute on S&Ps. I don't care if this is a 5-minute on crude oil, which this is a 5-minute on crude oil. We have our volume indicator. So the volume is starting to show when the market's in a downtrend. And this is a couple indicators here. First, we have our TSI indicator. When it's red, it means that it's in 2 time frames. 5 and 60 are in sell mode together. As the trend is going down, the bars are red. It means they're both in sell mode. All of a sudden, it turns white. That means the 5-minute is starting to turn. And so that's kind of an important element that we're starting to see a turn of a short term versus long term. But as the market is moving lower, the histogram component, it's starting to lose negative momentum. And we get a moving average cross, and we get a positive move in the histogram. Market generates a buy. All right, great. At this point, you could say, I don't know if I want to get in on that trade. All right, market moved up. It took out the high. Great. If you wanted to join the trade, next bar, what does it do? It pulls back close to your entry, right? So here's a funny thing, gang. This is why you can utilize this as a guide. How do you set your trades? Well, first and foremost, we just overrode everything. I didn't optimize anything. I just said put dynamic on, which would give me the difference between last conditional change and ATR. And then you have the LCC in fuchsia, you have your dynamic in gray, and you have your compression, which you'll note the compression is orange. It didn't kick in until 2 ATRs were developed. So the ATR of a 5-minute bar, by the time you got a distance from your entry to the market, 2 ATRs, then the dynamic kicked in. Notice which one is further away. The dynamic is closer, but the compression is further away up until right around here. Now the compression starts to take over. So notice that as the trend starts to move and as time, notice that gray is out of the way, then orange, and then it's like a race. One tightens up the stop more, and then finally you get your compression exit. Good, bad, or indifferent, your compression exit was taken out. But it won't turn on until a certain ATR starts to turn it on. And that is the one function in B18, or at least in Algo 17, that we had created. And that would be the, again, compression exit. So if we change and we want to optimize, which I don't because we're running out of time, you optimize how many ATRs, what's more profitable, and you can override that. You can override any one of these functions in the strategy. So as far as what we did that was dynamic, and I know we've covered this a few times, but what made this one different? Why do we keep improving something? If it ain't broke, don't fix it. Because there was something for me that I found to be kind of different. And that was when it came to PPS, should I take a buy signal if it's a PPS buy signal? How do I filter out bad buy signals? I got volume to help me, but I also have one other item, maybe a moving average. Maybe if we get a PPS buy signal above a longer term moving average, what's the longer term moving average? 1 period, 20 period, 50 period? I don't know. We could do that, and that's where that came. But here's a situation that is a momentum play. If the market is truly bullish, and this was the difference of what we created this time around, is that if the market is truly bullish, if we took a moving average of highs, right, and you took a moving average of the lows, you got a channel, right? If the market breaks out or closes or gives a PPS buy signal above a moving average, that would be more positive. So should I be using excuse me, a moving average of closes, or a moving average of highs, or a moving average of low? Well, I don't know. So we put in the ability for taking a choice of a moving average of the high, the low, or the close. And the reason why we have it titled HLC 1, 2, 3, because so that you know easily, 1 is high, 2 is low, 3 is close. So in this model, we have a risk reward of 2.4 to take PPS sell signals, with a moving average of 8, and it best works with moving average of closes for sell signals. And maybe because market tops take longer to form than bottoms. And so therefore, I think that's important to understand what we created and why, and can you optimize. If you optimize something with too much time, 6 months, look at your ATR on a 5-minute basis. You're asking for a 6-month change of market dynamics. That's crazy. You're probably going to have 800 trades to filter out. So what you want to do is maybe go back 60, 90 days on a 5-minute basis, and then select the time frame that you physically will be able to trade. If you don't mind trading while you're sleeping, knock yourself out. I always suggest that everybody be monitoring this program, because if your orders aren't accepted through TradeStation, if your internet goes down, you could be in a world of hurt, okay? So an algo optimizer just allows you to say, I would have taken that buy signal anyway, and based on the dynamics of trailing the stop, it executed for me, and it's all kicked in, and I don't have to worry about the profit potential. And if we do get markets that move outside the norm, what are the norms, person? Well, the norm is by also understanding your strategy. You have to take a look at your performance sheet, friends, and say, what is the average profit on a trade? What is the average profit on a trade? Well, let's see. The average profit on a trade, I mean, we didn't really optimize it anything, and this thing's nearly 60% accurate. Not bad. I mean, we could do a little bit better. I know that. But the average profit, let's take a look. The average winning trade is around $250, $240 per contract. So if you're in a 2-lot and the damn thing's up $500, the average profit, you're like, why aren't you getting out? Because the average profit, now combine the two, just like in this case, from 53.80 to 54, let's say 10, that's $300, okay? So if you take a look per contract, all right, so that's not bad. And then this one gave a lot better profit. So again, what happened today is we had an expansion of ATR as well. So bottom line, I think it's a combination of, you have to know the market you're trading, the condition of the market you're trading, and what are you asking your algo optimizer to do. And so again, we've enabled people to help develop, and it's my job to help teach you, what do these settings do for you. I want to take buys only. Perfect, you can do it. I want to trade a trailing stop mechanism based on average true range and last conditional change. Well, there they are, gang, and you can see they're overlaid, they're color coded. Well, I don't want that. I want last conditional change. All right, well then manually you can trade the market and say, turn off the thing, and if the market maybe closes below the last conditional change, I'll get out. Oh, by the way, if that's the case, you would have been stopped out right there, because that was the purple was the last conditional change right there. The ATR allowed you to stay in. The compression allowed you to stay in. So it did finally get out over time, and not a bad profit. So the moral of the story is the market, the indicator, the setups all did the right jobs. So again, I think we had a really good meeting today. We had some good questions, starting off with everything that I think many of you were asking for. I hope that covered it. This was recorded. I want to also bring into focus about, if you're not familiar, we have on our website a couple things that you can go and learn more about the Algo Optimizer. So let's go over to our main website, and I'll just walk you through a couple things here. So if you go to, like I said, the home, our main website, and you go over here to Person's Indicator, and you go to Trade Station. So that's where you're going to find, again, everything about the Algo 17. So click on Trade Station. We have a lot of instructional videos. Number one, if you're not familiar with Algo Optimizer and you want more information, you can find everything you want about the Algo V17 Extreme. Now, I'm not going to rename it V18, Algo V17 Extreme V18, because this is the 18th version of 17, by the way. That's why I said it's probably Algo 59. But this is the, again, just an insanely incredible product that gives you so much versatility and power to control the markets you want to trade, when you want to trade them, how you want to trade them. And I mean, time of day, amount of risk, position sizing. I mean, it is unreal for everything that you get there. I do get a lot of thumbs up, and I think there is a learning curve. As with any product, there's a learning curve. And it helps to know and be educated about a market. You just don't say, hey, I'm going to start learning how to trade and be an expert today. But the Algo 17 program, what we've created, allows individual retail traders to have a product that is a automatic trading system that allows you to change and adapt with the times, to grow in it. You will never find that it's antiquated. In fact, all of my work, whether it's high close doji, PPS, whether it's looking at momentum breakouts, everything that we've created, I keep pinching myself. When is this not going to work? It still works. I think price dictates all, and the condition of that price is what's powerful. And when we put it together with that volume indicator, you can see that it helps to substantiate trades. Another function of the Algo 17 is, do we take market orders or do we take stop in to help filter orders? That was another dynamic function that is optimizable that'll let you know, what do we do to help filter out bad trades, because bad trades will happen. We didn't really optimize much on a crude oil strategy, and it was 60% winning trades. That means 6 out of 10 trades are winning trades. And we can optimize, or we can develop it. We can reduce our profitability and have a really sick trade. I mean, anyone can make 10, 15 cents out of the market, right? I mean, you can utilize that to do this if that's what you want to do. But you have the power to do that. To learn more about this, simply go, like I said, to the website, and you will see where to find information about all of our indicators that are available on not just TradeStation, but other platforms as well. So, but the one that we're referring to today, when we were talking about the radar screen, is the lifetime package, and again, the Algo 17. Now, next week, if you are in the live seminar or in the live trading room, we are going to be conducting one of my annual trading seminars down here in Palm Beach Gardens, Florida. Why is this? This to me is going to be a very exciting, because I think it's not just going to be one of the most exciting ones that I've done. I got a few clients. Really, it's not jam-packed, but it's got a lot of really smart people coming to it, and good traders. And that's what I think is cool. The ones that really appreciate what we're going on. more importantly, we've got an event that I am taking some of the guys out on a sport fishing, a 3-hour tour. We're going out on a little 38-footer convertible sport fishing vessel. We're going out fishing over here in Palm Beach. If we catch a fish, then we're fishing. If we sit around and go on and just go for a boat ride at the very least, at least we're going to have camaraderie and a boat ride the day before the event. So we're doing that at our at my as my guests, and I'm taking everybody out. So it'll be interesting. But we are also having some really phenomenal topics that I think are going to be well received, that will interact well with this algo program, such as, let's take a look at what we talked about today, relative strength analysis using the PMC, or looking at momentum strategies, like do we take buy signals after a moving average of a high versus a close, correlations, inverse and tandem relationships, stocks, bonds, for example, and looking at momentum and mean reverting strategies. A mean reverting strategy is bottom picking or top picking. And when do we do that? I alluded and shared it with you already about looking at convergence and divergence patterns within the indicators that we created. So I'm not teaching everything about general stuff like stochastics and MACD. We're teaching how to trade and make money with the indicators that I've created, and how we use them day in and day out, and how we've used them efficiently in this unreal world that we are in right now in the market. So anyway, if you didn't sign up and you wanted to come, there is room for you. I know it's kind of last minute, but again, you can find more information about the seminar next week right there by seminars. And I will give a small shameless plug. We have a financial cruise, an annual cruise that we go on, which is a gas. My wife, Mary, is in the wrong business. She should be a cruise director, because she knows where to go, how to go, and where to go, and what place to see. And we are this year, or next year, excuse me, going to Asia, Singapore, Thailand, and I think in Malaysia. So we are going to have a heck of a wonderful time. We do a little bit of seminar teaching so that the folks that make us do this by law, as in tax write-offs, you all get a great educational format. And at the same time, we bond and we have great times together. So it's really solidifying I guess you want to say, software trading developer and client relationship. It's really neat stuff. So anyway, this is a really awesome time. I thoroughly enjoy these cruises, man. I mean that. We bonded with a lot of people, and I mean, it has been a great time. So if you're interested in learning more about it, that's where you can find it on our website. So again, thank you all for attending. If I didn't get in all of the questions, we will try next time. And again, we always have our room in the live trading room to cover some of these topics. With that said, I wish everyone a great evening. This again was our monthly PUG meeting, in which we cover a lot of your questions, and especially on what changes and how we are using the person's indicators. Thanks again, everybody. Have a great evening. And go stock market. Go, baby, go. And I think it's time that you all take a gander. And I will say this, and I know it's overtime, but by the way, new high breakout. I've never seen this, gang. Where, and let me reiterate, I've never seen an advanced decline go parabolic without prices following through. And it's not just in the NYSE, the Dow Jones Industrial Average, the S&P broke out, and the lonely Russell is maintaining momentum strength in its advanced decline. The only thing is, we got 3 days of dojis in the IWM, which is pretty strange. I'm not a big fan of indecision in bull markets, but I think two things are happening right now that is very intriguing. If we break and close above, and I hate to say it because it's one of these pain in the ass last conditional changes. Once again, the guy who invented that, really kind of ignorant, right? I mean, it just hurts. But that day right there, the high of that red candle right there, if you get a close greater than that high, baby, we are going to launch up finally. And this has been a hell of a sideways trading range. And the funny thing is that this trading range is coming at finally a newer movement momentum in volume, and this time with a new accumulation of advanced decline. Even the on balance volume is showing strength in this move. Now, we have not played catch up to where the Russell was last year. You could clearly see we are well off the highs in the Russell from last September. Most investment managers did not want to be in the Russell. They felt we were going to be in a recession and the China trade war is going to hurt small cap stocks. And no one wants to be in growth because they think we're going to be in a recession and we're in economic contraction. And man, if everyone kind of scratches their head and says, baby, we ain't in a recession and maybe growth is time to expand. There's another seasonality. We call it the January effect. The Russell, this may take a lot of people by surprise one more time. And just for the record, we do have long exposure in the Russell right now, both in the advisory service and J-Person Asset Management. So needless to say, I think that this is something that is showing expansion of accumulation of stocks as the advanced decline is moving higher, while the stock index is not yet. And it's either going to be one of these delayed reactions or I'm going to be dead ass wrong. And I think it's going to be the latter. I think the market is showing a delayed reaction in this this market. But by gosh, we another indicator that we created for our VIP clients, we used the McClellan oscillator formula and applied it to S&P 500. This is another dynamic indicator. So instead of, we don't trade the NYSE, I trade the S&P 500. But Sherman McClellan's oscillator is very powerful, and it shows overbought, oversold conditions. And by the way, we are not overbought, and we are in a firing upside trend in the McClellan oscillator, which also alludes to the fact that the stock market could break out and make a newer high. My upside target in the S&Ps, and I've been saying this for a little while, I have a 307 to 310 by year's end. And the way this market is trading right now, it ain't trading bearishly. But that advanced decline is super strong, and I've never really seen a market not try to test and take out highs when the advanced decline makes a newer high. Anyway, another one of our person's indicators that we've created was to break down the breadth of the market in all the top stock indices. Thanks again for watching. That does conclude our time together tonight.